Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, April 25th, 2019. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame here for the ES. You'll notice that price continues to hold up here at these highs after the recent rally. Here's the 29.27 half key level. That is the FOMC key level from last September 26th. That's the level that I mentioned before that I could not see the market not reaching after coming this far, and that's why every pullback was a buying opportunity for a likely push into that level, and we finally got it. We've gotten as high as 29.3975 here and still have a little bit more to go before we come up here and reach those highs into about 29.50. Again, overall, I just don't see price coming this close to those September, October highs and not taking them out. So again, a little bit more here before we take them out. We could even get up to about 3K before we start to see maybe some type of pullback or wider pullback than we've seen. So again, this market has been very, very bullish. I continue to mention that. This has been kind of a melt-up phase the entirety of April. Now heading into May, we'll see how it plays out. And the moment here, we have a very narrow range developing for the day. Again, almost an inside day here with barely a push below the previous low. If there's any breakdown from the 2-day lows here, that could open up a return back toward the 29.05 zone, 29.10. Again, anywhere inside this trigger zone could offer an opportunity to bounce it right back up if that were to be the case. So we'll keep an eye on this. Above 29.39 here opens up at least a push into the highs from last year, 29.50 or so. So again, right now still continuing to see a melt-up phase. Everything is still bullish. If we were to pull back, say 2900, 29.05, that could be an opportunity to defend for another round of strength. All right, let's take a look here at the NQ. NQ remains very bullish. The previous session here has a very tight day here after the trend day. We mentioned that before. After you see a trend day, likely to see compression, and that compression provides opportunities to fade the edges multiple times. We've gotten an upside move and holding above the previous session's high today, and that gives us a key level to watch. You got 2-day highs, and price is forming a little range just above those 2-day highs. So if there's failure to hold above 78.50 today, early in the morning, that could lead to a rotation back down to 7,800 and perhaps even a little bit lower. So that could be a very nice near-term pullback on an intraday basis. Now, if price does pull back to 7,700, 7,750 or something like that, that could provide, again, another opportunity to push higher. However, we have not seen that type of pullback this entire month. So to get that going here, maybe a long shot at the moment, but again, that 78.50 would be an early level to watch for failure this morning that could bring us back some measure. We've only tested the 8-period average one time this entire month, and it was barely before it took off. That's how bullish it's been so far. And again, we're coming into a zone here, 7,900, even 8K, where we could begin to see some sort of rejection here above these highs that could lead us perhaps back down the way. So again, starting to proceed with caution as we continue to push through these highs. Any failure to hold 78.50 could open up intraday weakness today. All right, looking at crude oil, you'll see here with crude, this one has a very narrow 3-day range. This one has also been trading very quietly throughout much of the month. We had a narrow 10-day range here, and I mentioned upon a breakout we could see a move of about 6 handles. It's already seen extreme movement here of about 4, and we've gotten already to a high range type of situation here on a 5-day range basis. But looking at it on a 10-day, so if we bring this up, let's bring this up and move it to a 10-day here. Right there, we're not quite there just yet. We've only started to break out here, and we have to about $6 before we get that 10-day range expansion. So we could still have more upside. From this low of 64, 6 points higher would take us to 70, 70.05 to be exact. So again, everything's still flowing higher right now. Very narrow 3-day range. If you look at the intraday or maybe the 60-minute chart, it kind of looks like a rounded top with a very clear support at 65.50. So I would say 65.50, 65.40, any failure there could open up a rotation back down towards 64s. But any failure too, failed new lows, say we do something like that, that could provide a great continuation towards 70. So right now, this thing is building some energy here over the last 3 days, and soon we may see expansion that gives us another breakout trending type of day. Is it going to be up? Is it going to be down? For the most part, this thing has been flowing to the upside, so even if it breaks down, I would be looking for signs of rejection for a continuation towards 70. And again, that 65.50, 65.40 could be very, very important to watch throughout the day. All right, lastly, let's take a look now at gold futures. Gold also trading a very narrow range here, 1, 2, 3, 4, 5, 6 days sideways. If we bring this back down to a 5-period range here, you'll see super, super compressed. So if you just take the last 5 days and don't even include this, you have a super narrow range right there, which is 51% of normal. The range is currently 14 handles. It usually trades about 25.5 handles of range on a 2-week basis. So we're clearly compressed. The other thing that's happening is this tight little range here has formed below the 1280 level. Again, this is what I mentioned before. We got the breakdown here and closed below it for the first time, but we really haven't gone anywhere. And if it really wanted to, this thing could break and go and fulfill that rounded top, and instead it is not. It is bringing bears in, it is getting them short, and it's not paying them. And eventually, if there's a break back above 1283, 1284, 1285, the squeeze will lead this thing back up, perhaps as high as 1305, maybe even higher. Right now we have lower highs coming into play that would take it to about 1300 to 1305 as a great target. So again, that could be a pretty significant target to the upside. So keep an eye on this here. If we get an upside break, it could be significant, and we can quantify that as well, right? On a 5-day range basis, if we get a breakout, it's usually about 35 points. You can see it here. We talked about it before. It's about 35 points here. Here was the narrow range, and boom, it went about 35 points of range eventually, right? So again, we could be looking at about a 35-point move. If it breaks above 1280, plus 35 takes you to 1305, 1315, somewhere in that zone. So again, that could be a pretty solid target right there, somewhere between 35 and 40 points ahead. So anyways, we're looking for some signs of expansion out of gold, and this is going to be the zone to watch it. So we could have a very nice move coming up. Could look something like this, where it breaks up first, then breaks down. It could be whatever way. So we'll keep an eye on it. But again, not getting paid the bears. So when that happens, there is the potential for a squeeze. All right, that's it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room.